Welcome to Commercial Connections, Investing with Confidence. Today, I want to talk about something that I'm hearing from a lot of multifamily owners right now, which is uncertainty. Let me start with this. A lot of owners feel uneasy about the market, but when you actually look at the data, the Eugene Springfield multifamily market is telling a much more stable story than what the headlines suggest. And that disconnect often is how things begin to feel like they're spinning out of control versus what's actually happening and if there's opportunities available. And often that's where I see mistakes being created. Most owners are hearing noise. Interest rates, are they up or are they down? The national headlines, stories from other markets that are crashing. But real estate is always local. So if you own multifamily in Eugene, Springfield, the fundamentals here matter more than anything else. Let's talk about what's really going on. First, let's talk about vacancy. Vacancy in the Eugene Springfield market has come down meaningful over the last couple of years. After peaking in late 2023, vacancy has settled back into the mid 5% range. And that's important because it's much closer to long-term norms than most people realize. In other words, we're not in distressed territory. We're also not in oversupply chaos. We're in a normalization period. A lot of the anxiety that owners feel come from remembering how tight the market was just a few years ago. When vacancy was unusually low, any increase can feel alarming. But without context, those numbers can be misleading. What we're seeing right now in the market is absorbing the supply, not falling apart. And that leads to the second piece of the puzzle, which is supply. The biggest delivery wave Eugene Springfield has ever seen happened between 2022 and mid-24. That supply is largely now behind us. According to the current data, new construction has essentially stalled. The development pipeline is down dramatically by more than 80% from its peak. And that matters more than almost any other matrix. When supply shuts off, markets don't improve overnight. They improve quietly, vacancy stabilizes, then it compresses, then rent growth resumes. This is the part that most multifamily owners miss. By the time confidence returns, the opportunity has often already passed. Another stabilizing factor that gets overlooked is demand. The University of Oregon continues to anchor off-campus housing demand. Enrollment remains strong and student renters continue to support a large portion of the multifamily market, especially in older, more affordable properties. And that brings up an important distinction. Not all properties are experiencing the market the same way. Newer, high-end properties saw the most pressure during the recent supply wave. Older properties built in the 70s and 80s have held their value so far, and they have tighter occupancy and steadier demand. That's especially relevant in the Eugene Springfield area, where the market is dominated by those older types of property. So when an owner tells me, I heard vacancy is up, my first question is where and what type of property, because those answers change everything. Now let's talk about rents. Rent growth has slowed. That is true. We're seeing roughly 1% rent growth right now, which feels underwhelming compared to prior years, but forecasts show rent growth gradually improving over the next 12 to 24 months as supply pressure fades. And again, this is not a boom story. It's a stabilization story. And stabilization is actually where a very healthy environment for both owners who are thoughtful about timing and strategy and want to keep their units full, it becomes a happy medium for them. This is where I want to pause and ask you something. If you didn't read a single headline and all you had was local data, would you still feel uncertain about what to do now? Most owners I work with realize pretty quickly that the fear they're feeling coming from their property, it's coming from the noise. That's exactly why I created the market snapshot. The goal isn't to push anyone to sell. It's to replace the noise with clarity. A market snapshot shows you recent sales and how your property specifically fits into what's happening right now in the Eugene Springfield market. It'll show you size of units, sale price, cap rates, buyer behavior, all in one place. Once you have that clarity, decisions get a lot easier. Whether you're holding, refinancing, selling, or just planning ahead, you're no longer guessing. And that's the key takeaway from today. The market is not broken. It's not overheated. It's just recalibrating. Owners who understand that recalibration early are the ones who stay in control. Thanks for listening today. If you found this helpful, please make sure and subscribe so you don't miss future conversations and market insights. And if you'd like a clear picture of what's happening in the Eugene Springfield multifamily market or the University of Oregon market, visit eugene-commercial.com to download a free market snapshot for either of those market areas. You can also schedule a free 15-minute discovery call if you'd like to talk through your options. Have a great day.